dollar index. Let's have a look at this. So really, we want to know, basically, when it comes to currencies, what the Fed's going to do. And are we going to see interest rates staying higher for longer, or are we going to see an interest rate cut coming up in the next month, at the next meeting in May? Probably, I think actually there's a good chance that they may cut and that we may see dollar weakness following that. But until then, I think we could see some dollar strength. We've already seen the Swiss National Bank cutting their interest rate. We did, however, see the Japanese government, Ministry of Finance and the Bank of Japan raising their interest rates from minus 0. I stand under correction. I think it was minus 0.5%, and it's now 0%. So they've actually raised their interest rates, but that's a whole different scenario, which we have to treat differently. So dollar index, as you can see, is really stuck in the middle of this big range, and I've drawn some channels in here variously to illustrate where we are. But if you go back to the beginning of 2023, January 23, that's where my mouse is right now, compared to where we are today, that's 9 months, sorry, 12, 14 months later. Excuse me for a second. I forgot to close my office door. 14 months later, 14 months, we're still exactly where we were at that time at the beginning of January, in January 2023. And that's where we are today. So really just a sideways move. In the bigger picture, however, the dollar is actually moving slightly up. Everyone thinks that the dollar is showing weakness, that we're due to get a weaker dollar. If you think about it, which currency do you think, considering the global scenarios and what's going on in China, what's going on in Europe, England retail sales numbers came out today, basically zero, basically flat. We've seen the British pound actually under pressure. We've seen poor economic performance coming out of various places in Europe, including England and Germany. And general, this idea that we may actually see the dollar holding stronger than other currencies because the US, because of economic strength, job growth, inflation's a problem, we all know that. But various other things point to the idea that the US may delay raising rates for a longer period of time than other countries. We've already seen Switzerland reducing rates. So that might prop up the dollar. Look at this long-term channel. This goes back to 2015. And I could actually pull this. I'm not sure how far I can go back on here. Let's try get this onto a weekly chart. See if this makes sense. So there's the weekly chart for the dollar index, made up mainly of the euro, the pound, Swiss franc, Japanese yen, and Norwegian kroner. It's going up. The dollar is showing strength. So this idea of dollar weakness is not, it's not shown on the charts. Yes, it's weaker than it was in 2000, but since the beginning of, well, really 2005 to 2007, the dollar has been on a steady path upwards. We've seen the euro and the pound and not so much the Swiss franc, but those other two moving downwards as we go along. So what do I expect? I think we could just really expect general dollar strength, except for possibly against the yen. Now, the yen is a different story. We're short on this one. We're short on the dollar yen. We're short on the Swiss yen. We got in right at the top here in Swiss yen. I think around, correct me if I'm wrong, those of you who are in my private group will know the exact number, but I think it's about 170.4 that we got in, almost at the top of this rally. And we're down at 168.2. So we're about 200 pips down, 220 pips up in profit, down on this market, which is really good news. And I see the euro yen's coming off as well, just what I said earlier, that we're seeing dollar strength, but not against the yen. We're seeing yen strength and dollar strength simultaneously. That's what's causing this dollar yen to go nowhere, because they're both fighting against each other. The dollar's trying to get stronger, yen's trying to get stronger, stuck nowhere. But against the euro and the pound, the yen is gaining strength. And the euro and the pound are also gaining strength against the dollar. So a bit of a mess, really. And it all depends on what happens with inflation and interest rates around the world, and particularly in the US. So those are my positions. Short dollar yen from around 140, below 150, actually, 149 something. So we're 100 and something pips out of the market, out of the money on dollar yen, but a couple of hundred pips in the money on Swiss yen. So we'll see how that goes. But overall, I'm aiming on dollar yen for a move down to 130, let's say, maybe 140, 130, possibly. And for these yen crosses, euro yen, Swiss yen, to move down quite dramatically, as I think that's where the path of least resistance is. When it comes to the majors, I really don't know. I think it's going to be very choppy. We've got an election year. We've got interest rates cuts coming up, predicted, planned, ideas about higher for longer or earlier cuts. Lots of conflicting opinions about this. And Jerome Powell's demeanor in his last statements to the press and his report was a bit weird, to be honest. He wasn't normal. He was sort of just looked like he'd sort of given up. I'm just going to check on this other computer to make sure. Live streams are very tricky, guys. It's not something that I often do, as you know, and it's not easy. So I've got 3 computers with different things running at the same time, and the market's going to open in 23 minutes time, and I've got to be ready for it because we're in quite a lot of positions right now.